Hello, listeners, and welcome to today's earnings roundup, brought to you by Proinvestor AI, the smart investment companion for retail investors. As always, we are here to break down the latest earnings reports and provide insights to help you make informed investment decisions. Today, we'll be focusing on the recent earnings update from Mtar Technologies, a significant player in the clean energy and space sectors. Mtar Technologies posted a robust performance in Q2FY25, marking a 14% year-on-year growth in revenue and an impressive 48% sequential increase. This rebound comes after 3 quarters of declining revenue, reflecting a recovery driven by its core space and clean energy businesses. Consolidated revenue for the quarter stood at 1.9 billion Indian rupees. The EBITDA margin saw an improvement of 640 basis points sequentially, reaching 19.4%. This growth is a result of favorable operating leverage, helping the company achieve an EBITDA of 368 million Indian rupees, a notable improvement from the previous quarter. Additionally, the company's gross margins reached 47.5%, showing a year-on-year increase of 190 basis points, though there was a slight sequential dip. Mtar reported an adjusted profit after tax of 188 million Indian rupees for Q2, a 4.2x improvement from the previous quarter. However, on a year-on-year basis, this represents an 8% decline, primarily due to increased operating expenses. Key business drivers. Mtar's order book remains strong at 9.4 billion Indian rupees, up by 5% sequentially, driven largely by robust demand in clean energy and space segments. The management also highlighted sector-specific drivers, with clean energy and space showing substantial growth in the quarter. Specifically, revenue from clean energy was up by 9%, and space sector revenues surged by nearly 2.7 times year-over-year. Other products saw a 17% increase, which also contributed to the company's growth. However, nuclear and defense segments experienced declines, with nuclear revenue down by 23% and defense revenue falling by 44%. Management guidance and outlook. Looking ahead, Mtar's management has provided updated guidance for FY25. They are now projecting annual revenue of around 7.25 billion Indian rupees with an EBITDA margin target of approximately 21%. This guidance is slightly revised, with revenue growth expectations for FY25 and FY26 adjusted to 25% and 20%, respectively, down from earlier forecasts. Despite this revision, Mtar remains optimistic, expecting strong demand to continue, especially in the clean energy sector, which includes fuel cells. The closing order book for fuel cell units alone was 4.9 billion Indian rupees as of 1H FY25, with execution expectations of around 4,000 units in CY25. In addition to its primary sectors, Mtar's new product offerings, particularly in defense, have started gaining traction. Their roller screws, which are locally manufactured, are now approved by the Ministry of Defense and are set to replace imports. This product alone is expected to generate revenue between 500 million Indian rupees and 700 million Indian rupees, marking an exciting development in Mtar's product lineup. That wraps up our earnings coverage on Mtar Technologies. As we can see, Mtar is showing signs of a steady recovery with a promising order book and growth in its clean energy and space segments, despite some headwinds in defense and nuclear. Here at Proinvestor AI, we are dedicated to helping investors like you stay informed, empowered, and ready to make well-researched investment decisions. And remember, the full earnings call and additional updates are available on Proinvestor's YouTube channel, where you can catch the details straight from Mtar's management. Thank you for tuning in, and until next time, happy investing with Proinvestor AI.